Welcome to Keeping Up with Trends. This is Fed Razak, Senior Trading Strategist here at CMTrading, and we're joined with your host, Sergio Davids.
What's up, Fred? How you doing, man?
Good. What do we got on the table?
Well, I thought we do something a little bit more educational. We've had a lot of responses from people asking us, very specifically, how do I trade Forex? How do I trade commodities? How do I trade crypto? So I thought, well, let's, answer the people. So I'll do a couple with you. Today, we'll focus specifically on Forex. So, how to trade Forex? What is Forex?
What is Forex? Okay, so Forex is a compound word for two words, foreign exchange, right? So at any
Yeah,
given time, when you're doing any sort of international commerce, or you're traveling, or you go from one country to the next currency, there's generally a home currency for every country. Okay, it's as old as history as we know it, right? The
right.
British pound has their currency. South Africa has the South African rand.
Yeah,
Almost, unless you're in a certain economic bloc like the euro. But back in the day, there used to be the Italian lira and the um, French franc, right?
French rank, yeah.
Um, all that stuff. Okay, so that unless that happens, so what happens is that if you're going from one country to the next country, generally speaking, they're not going to accept your currency from wherever country you're coming in, right? If I want to pay for an iPhone in South Africa and I give them dollars, they say, sorry, sir. And they're going to politely say, go exchange it into South African rand and you could pay us in South African rand. So as a result of it, it creates this exchange between one currency and another currency. And then ostensibly, what you're doing is you're buying one currency and you're selling another currency. So, for example, let's say I need to acquire South African rands, it costs me a certain amount of money. $1 will give me about 18 South African rand. Okay, so I'm selling the dollar, but I'm buying the South African rand, right? And that's basically what it is. At any given time, depending on interest rates, depending on a country's economic stability, depending on political situation, whatever it is, it'll either appreciate the currency or depreciate the currency. So, for example, if the United States is giving like 7% interest at the bank, then if I'm living in a country like um, Japan, I'm going to exchange my Japanese yen into dollars so I could put it in a American bank so I could make that extra interest rate because the interest rate in the American bank is higher than the interest rate in the Japanese bank, and thereby it increases the value of the dollar because there's more demand for the dollar. And that's basically how it happens in the financial markets. Now, it doesn't,
So,
you know, yeah,
yeah.
go ahead.
No. I wanted to ask, just on that, what are some popular currency pairs?
Okay, so there's what we call the major pairs, okay,
Right.
which are the strongest pairs on the exchange because either demographically or economically they're so significant in the world. So obviously the U.S. dollar has its significance. The euro, the British pound, the Japanese yen. It's interesting that the Chinese yuan isn't because it's not generally used in the world. Obviously,
Right.
the US dollar is the most used currency in the world because the standard is off the dollar. So it effectively appreciates the value of the dollar almost artificially. Because if, I've mentioned this in the past, if South Africa has to buy from Saudi Arabia oil, um, it has to transfer the South African rand into US dollars. They pay the Saudi government in US dollars, and the Saudis, translate the US dollars into real, their home currency. So, when you have like this common denominator currency, that's what the dollar really is. It's that common denominator currency. What cryptocurrencies is trying to do is, in effect, devalue the US dollar like that. And that's what's been happening.
It's interesting for me because I think a lot of people know about the majors. You got your USD Euro. Um, but what are some of the least common currency pairs that you don't see that often that are being traded?
Well, it's not least traded, it's just less traded, let's say,
Yeah, less
because
traded. Yeah.
so we call them the exotic pair.
Okay.
They Okay, and I just want to make this point right before we get into it, is that there's a difference between the buying price and the selling price of any currency. There's not one price in the market. And this is what we call a bid and an ask.
Right.
Just like when you're selling a home, right? There's a asking price. I'm asking, 3 million rand, okay, for my
Yeah.
house, okay. So
Okay.
that's my asking price. Now, if you bid a price to it, Sergio, you're bidding, okay. So you'll bid, let's say, 2.5 million. Okay. Now
Right.
there's a spread between the two, right? There's that 500,000 rand. That's the difference, right? So we call that the spread because I'm asking 3, you're asking 250, 2.5, and there's that difference of 500. Now,
Right.
if you decide to, you say to yourself or your wife or significant other, tugs you by the shirt and says, it's worth 3 million, buy it. Well, you're buying it on the asking price, okay? But at any given time in the financial markets, there's these two prices, and they come to meet either by selling it on the bidding price, meaning either I could concede and say, you know what, I'll sell it to you for 2.5, or you concede and you buy it at 3. Okay. And those are the two options. That's basically how it happens in the financial markets. Okay. So when we get to exotic pairs, the spread is much wider than the major pairs because they're not as traded as often. So whereas the euro has a 1.5 spread, something like the USD rand has like a 5 pip spread or something to that nature. I don't know exactly what it is off the top of my head, but something to that nature. So the exotic pairs are traded not because they're less significant, but they're less common that they're traded. And so you have lots of exotic pairs. You have the Polish zloty versus the US dollar. Okay,
Oh wow.
Polish part of euro. Um, there's lots of there's the Czech krony, I believe it is, and what else is there? The Canadian dollar. Okay, even though
Right.
Canada is a country, but it's not considered, a economically and demographically significant economy enough to be called a major. And the majors are like 7 pairs. Okay, so
Yeah.
everything else is really secondary after that.
So so what makes the forex market so attractive to traders?
So initially, that's really a great question because we initially were known as a Forex trading company. Um,
Yeah.
and it's a misnomer because we provide all the 5 major um, categories of assets that people are able to trade, including stocks, indices, commodities, and cryptocurrencies, and of course, Forex. The allure to bringing people to trading Forex is that there is much larger um, leverage to trading the financial markets. Leverage is basically a additional buying power that the trading company or the broker provides its clients to trade the financial market. So, for example, if you put into your account $100, generally speaking, depending on which trading company you're working with, you get up to 200 times the amount to trade. So, for example, on a $100 deposit, you're able to trade up to $20,000. That's a big
Yes.
that's a big leap, right? So you're able to swing $20,000. The advantage of it is but remember, leverage is also a double-edged sword. Just because you have much larger money that you can control, that much more responsibility is on your shoulders that you don't go negative in it as well. So it's a double-edged sword when it comes to forex symbols. And remember, there is volatility in the forex symbols, but ultimately you're trading money for money. You're not trading an asset. So there's, historically speaking, because of the majors are much more stable economies, there's less risk involved. So those are the
Mm.
two real
Yeah.
main factors of it. It's leverage and less risk.
So to end this off, what advice would you have for anyone out there wanting to start Forex trading, in 2024?
So, Forex has gone through a tremendous, I would say, change over the last 10 years. Forex pairs like the majors were much more volatile. I would say about 8 to 9 years ago. They've become much less volatile over the past year. Um, they're still great assets to trade. Um, and they still have, pockets of opportunities. And they have their character and they have their specific style of trading, just like every asset does. And just like you familiarize yourself with trading an asset like Nvidia that has just been trending upwards, right? You also have Forex symbols that are doing that right now. One example of that is the Turkish lira. The Turkish lira has been depreciating since May of
Yeah.
2023 consistently every single week about 10 to 20 pips. And basically, had you shorted the Turkish lira about, I don't know, a year ago, um, compared to where it is today, you, depending on the size and depending on, you would have at least doubled your money almost. Okay. It went from
Yeah.
18 Turkish lira to 30 Turkish lira. I think it's 31 even today, versus US dollars. So when the dollar was able to buy me only 18 Turkish liras a year ago, today I'm able to buy 31 liras. So the dollar's got
Wow.
much stronger, right, versus the Turkish lira. That's just a extreme example of it, but that's a really great example of it, where you see that the market has really given you that opportunity to trade the Turkish lira as it's depreciating. Now, there are other markets where it's not just trending downwards like that. There are ranging bound trades that have been, but you have to understand that, you know, ultimately, this is part of the fabric of our society, that we're able to trade these type of assets, which are, and they're not going away. Okay, unless we all go and move to Bitcoin, which may be the case in the
Well,
next.
seeing as how it's pushing, $70,000,
Right.
that
It
future
might.
might
I don't
not be
know.
that
Can
far
we afford
off.
it?
That's true. Can we afford it?
So ultimately, so getting involved in trading forex symbols, I think, is great. You just have to respect the leverage, know your boundaries. But they trade like all the other assets. I don't look at assets, and you do have to know the nature of the assets. You do have to know the character of the assets. But technical trading is almost blind to the particular asset that you're trading, just because it'll tell you what it's doing, right? It'll communicate to you, whether it's strong, whether it's weak, whether it's just trading in a range and it's not sure yet. Um, and that's just, sometimes it's really very easy trading forex symbols, and it's just, you know, it's there. It's sometimes that easy as just buying it and holding it, and you're good to go.
Cool. I'm hoping anyone out there, if you're interested in going to Forex trading, this is the time to do that. Please like and subscribe, and we'll see you on the next one.